Holy flippity flip flop flap and smokes everyone, the stock market sell-off is continuing, the Nasdaq is officially in a correction, but gold and silver are shining brighter than ever. What caused this sell-off today? Why is gold and silver booming? This is exactly what I'm going to go over in today's video, so let's not waste any time. Let's get straight into it. Okay, so first things first, let's look at the indices, everyone. Let's look at the stock market indexes, for example, the Dow, S&P, Nasdaq, Russell. Halfway through the day, they were all in the green, and then all of a sudden, there was huge selling pressure right at the close. Right as Joe Biden was about to speak, I don't know if that had anything to do with it. We can see here the Dow and the S&P 500 fell about 1%, but the Nasdaq fell 1.15% and is now in official correction down more than 10% from its all-time highs. And we're continuing to see the small caps get wrecked, with the Russell 2000 down 1.5%, almost falling below that 2000 level. So this is quite worrying, everyone. We're having red day after red day after red day. Normally what would happen before is there'd be a red day, maybe one or two, and then the dip buyers and the hedge funds will come up and buy up every little dip. We're not seeing this, everyone. We're seeing continued selling pressure. And then every time it seems like it's going to go green, then at the end of the day, there's huge amounts of selling pressure. So what this tells me is insiders know things are going to get a lot worse if inflation doesn't get out of control and the Federal Reserve has to start hiking interest rates much more. We could easily see the S&P 500 go into correction as well, and we could easily see the Nasdaq fall more than 20%. But look at this, everyone. Gold is up 1.66% to $1,842 an ounce, and silver is absolutely booming, up 3.14% to $24.23 an ounce. So what I think could be happening with gold and silver is we're seeing a flight to safety, and this is why you always want a little bit of gold and silver in your portfolio. So times like this where your stock portfolio is absolutely crashing, at least gold and silver and maybe even mining stocks or maybe even some oil stocks, if oil's going up, will help hedge those losses. But there's also some interesting information going on about the Bank of America that has a huge amount of short interest in silver, and so this could also be a short squeeze that we're seeing in the silver markets right now. And again, it's funny why people hate on gold and silver. They say, look, they do nothing, they're not productive, they haven't had any good returns. Well, gold and silver, again, it's insurance for your portfolio. It goes up when times are not looking good. When the economy is so-called booming, the stock market's booming, gold and silver may not be going up that much. But it's times like this when things start hitting the fan, when things start looking pretty dire, that's when gold and silver shines. Now, also something happened very interesting with the 10-year US Treasuries. They hit 1.9% today before retreating. So I'm sure that must have been the Federal Reserve coming in to buy up the 10-year US Treasury to bring the yields down. And we can see they're now down to 1.85%, but still very high. But something that is surprising me is Bitcoin. Bitcoin continues to be very flat. Normally when we'd see a big sell-off in the markets, we'd see a lot of red with Bitcoin, but this hasn't been the case. We can see here Bitcoin's just flat at $41,700. But this may not be the full picture of what's really causing this in the markets. Let's have a deeper look. We're seeing more and more calls like this. The Federal Reserve needs to raise interest rates by 0.5 point to reclaim their credibility. This is according to Bill Ackman, who I don't trust at all. I don't think anyone should trust him. I'm pretty sure he's shorting the market, but the Federal Reserve does need to start lifting interest rates very soon to get this inflation under control. And really, they're massively behind the curve. They should have done this 6 months ago. But also, we got some new news on inflation that show things are getting worse. UK inflation soars to 30-year high as cost pressures continue. The inflation hit an annual 5.4% to its highest since March 1992 and up from 5.1% in November. Economists polled by Reuters expected just a 5.2% increase. And so this has investors betting that the Bank of England is going to hike interest rates at its next meeting. Markets will be closely watching the Bank of England's next meeting on February 3rd, with policymakers considering another interest rate increase after a 15 basis point hike to 0.25% in December. And you know what's funny, everyone? These little baby interest rate hikes of 0.25%, what are they doing? They're not going to do anything. When inflation is at 7%, they need to get interest rates up to at least 2 or 3% very quickly to bring it under control. A 0.25% interest rate hike will do nothing. All it is just central banks doing a lot of talk to try to talk down inflation, but they don't really want to do any action. But we're about to start to see this affect the housing market. Look at this, everyone. So US mortgage rates jump again, causing headache for home buyers. The 30-year fixed rate mortgage is now at the highest level since April 2020. Some lenders will be at 3.625%, but many are already up to 3.75%. And what we saw in 2020 was interest rates hit a low of around 2.6 or 2.7%. So we're now seeing a full 1% interest rate increase in mortgage rates. So what happens in the housing market is very slow to react. It's not like the stock market that can react immediately because the housing market is very illiquid. But what we're going to see over the next 6 months is a big slowdown in the housing market with these higher borrowing costs, because remember, the housing market relies on debt. And what we really need to start seeing declines is mortgage rates to go up another 1%. That's right, just another 1%. And we'll start to see house prices fall. But again, the housing market is very slow to react. So it may take 6 months for us to start getting that data. So what you probably want to know, what does this all mean for you and me in simple terms? Well, what this means is, unlike 2020 and 2021, when every time it looked like the stock market was going to sell off, the Federal Reserve was there to save the day and save all these dip buys, they're not going to be there to save you this time. And just like how they said, don't fight the Fed on the way up, you may not want to fight the Fed on the way down. And also, like I've been talking about extensively on the channel, everyone, it's not just interest rates going up. The stock market is extremely overvalued, with the Shiller price earnings ratio at 37, which is the highest ever besides the dot-com bubble. So if you think the worst is over, really it could just be beginning, everyone. And going back to gold and silver, if we do enter a recession from a weakening economy and the Federal Reserve fighting inflation, this is where we could see gold and silver really shine and keep going up. Or even if it just stays flat and the stock market falls 20%, well then you're still 20% better off than being in the stock market. Not financial advice, not telling you to sell all your stocks and go all in on gold, but that's just why it's always good to diversify. But everyone, what do you think caused this sell-off? Let me know. Now for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.